Welcome to Bazaar Morning Call. I'm Lata and with me Anuj and Sonia, and never a dull moment as we were discussing. With this inversion, basically the yield on the 5-year is going to be less than the yield on the 2-year. Normally, as you progress, the longer the bond, the more the return, because the more the uncertainty. But if people are buying the 5-year and not the 2-year, the feeling is there'll be 1 or 2 rate hikes, but not beyond that. And beyond that, growth will be a scare, and that's why you're going to buy bonds. That's the message that people take from this inversion. Of course, there are worries about growth, and that was always accumulating. The tax cuts fueled US stocks this year. They won't be available next year. Higher tariffs look a likelihood next year. And of course, there is the normal growth peak off after 2 or 3 good years. These worries were always preying on the market, and today the bond yields have expressed that worry. At the moment, we see Asian markets following suit, but not with such vehemence. It's possible that India will kind of outperform even when it falls, because it is a very domestic economy compared to other economies, but there is no getting away from the global tide.
Lata, morning, Anuj, morning. Just when we thought we're done worrying about the trade issues and maybe some resolution there, bang, comes another thing to worry about, right? Well, that is, I guess, the nature of our job. But we were looking at some of Donald Trump's tweets during Power Breakfast. He calls himself a tariff man. So I guess he gives himself some kind of superhero status, Superman, tariff man. But I mean, jokes aside, he also says we're either going to have a real deal with China or no deal at all. So even that angle is sort of nobody knows what's going to happen with respect to that. So those are 2 big cues to watch for, the yield curve as well as what Donald Trump said. But for our own markets, yesterday we saw selling both from FIIs and DIIs. It was a small quantum from FIIs, about 56 odd crores. DIIs also sold almost 520 crores in the cash market. So some pressure perhaps could be expected. Anuj, morning. The only silver lining, I don't know if you can call it that, is that, as you've been making this point as well, whenever the US markets fall, India does better lately. Do you think that could be the case today?
Morning, Sonia. And, frankly, I never thought, it's done. I remember we spoke about the fact that December is a good month to not trade in the market. Yeah. Take some money home because, the market had given you enough indication that this is going to be the kind of month. And look, cash is a position. Cash is plus 0% or 0%. It's better than minus 5% or minus 6%. Always remember that this recent move has trapped traders both ways. The point we made yesterday, expect IT outperformance versus banks. This week, in fact, the Nifty is flat only because of Nifty IT. The Nifty IT is up 2.5% and the Bank Nifty is down 0.6%. Now, we've already fallen. The MSCI emerging market is up 0.7%. Asia ex Japan is up 0.2%. All through last month, we were talking about our outperformance. This month, the first week has been about India's underperformance. Some part of that is because currency has also come into picture once again. Day before, when the whole deal had happened, we had suggested that that was the day to perhaps take some contra shots. Today, perhaps on a gap down, that should be a good opportunity to close down those Nifty shorts. It won't surprise me if at some point Nifty turns into the green today. And so the risk reward will not favor a fresh short at gap down. The risk reward favored a short trade yesterday or day before, not today at gap down. The Bank Nifty is weak, and the Bank Nifty's logical move towards 26,000, again, not in a straight line, is possible. Today is going to be a really good day to perhaps try that short trade on Bank Nifty if there's recovery, because the market's priced in a dovish policy. When you go into policy, you want to see what has been priced in and what could be the surprise. A dovish policy will not be a surprise. If there's no dovish policy, that would be a surprise. So that way, and the Bank Nifty started to underperform already. So if there's any rally on the Bank Nifty, I think that would be a time to perhaps try a short trade on Bank Nifty because it's way overbought. HDFC Twins hold the key for me for market sustainability, because for last 2 or 3 days, there's some selling which has come back in HDFC Twins after a big rally last month. So that's something to also watch out for.
Okay, well, since Anuj flagged it off, on the policy itself, no movement on rates, but a dovish stance is what the street is expecting?
Yes, and they will probably indicate that by lowering their inflation estimates. Their current inflation estimates are much higher than what actual inflation is turning out to be. So for the second half, they had forecast 3.9 to 4.3, a good 50 basis points lower on both ends. So that would be 3.3 to 3.8 kind of inflation forecast, as well for the first quarter of next year. I think they stood at 4.8. They will bring it down to around 4.3. That would be the biggest dovish indication. The other one would be growth. I don't know if they will touch that 7.4% forecast, but chances are they should, because second quarter GDP disappointed, and now the global cues are unmistakably speaking about lower support. Yeah, we are going to get less support from global growth. So that could also happen. They cannot move on rates now because last quarter they went on into calibrated tightening. But could they change in 1 month? That's what people will watch out for. They went from neutral to calibrated tightening in October. Can you go back to neutral as early as in the next policy? It's a little difficult. In our own, shadow monetary policy committee, Citizens Monetary Policy Committee, there was one vote which said, yes, they have to go to neutral. And the remaining 4 said, you have to go to neutral, but not now, next policy, because it's way too soon. Now, whether you like it or not, RBI has been a little unlucky, or maybe lucky, in the sense that every time there is a policy, either indicators are peaking off or troughing out. Last time we saw crude peaking off and rupee troughing out. So it quite could be that the growth scare also peaks off today, and we don't speak about the yield inversion so much tomorrow, and therefore the Reserve Bank doesn't want to sound way too dovish. We'll really have to wait and see, but there's no doubt that you have to show your dovishness in some fashion. Will they go to the extent of a SLR cut? That possibility is there. That's also an indication that we are worried about growth, and therefore we are releasing more money for growth. So these are the various things that you would look out for. The technical experts are better to speak about today's move and tomorrow's move. There is no taking away from the fact that there is a growth scare. Whether you're looking at India, this growth has peaked off from the first quarter, or whether you're looking at global trends. So at some point, the market will have to price that in. Liquidity can take you this far. It has to come to terms with the growth scare, both abroad and in India.
Okay, well, we'll keep an eye out on that. We won't have to wait too long, just a few more hours, and we'll know what's on the RBI governor's mind.